Everything you need to know about DSCR loans for real estate investors coming up. Hey guys, I'm Adam Lesner, and my oxygen is getting borrowers approved for a mortgage when other lenders say that it's just not possible. Today we're talking about DSCR loans for real estate investors, how to get approved, what's involved. Let's just jump right into it. So what's a DSCR loan? A DSCR loan program is a way for real estate investors to get a mortgage based on property cash flow, not personal income. So this means tax returns, pay stubs, nothing like that's going to be required. DSCR stands for Debt Service Coverage Ratio. Debt Service Coverage Ratio is the ratio of operating income available to debt servicing for interest, principal, and any other payments liable on the property like HOA dues and stuff like that. In basic terms, you take your rental income divided by your mortgage, including taxes and insurance, and that equals the debt service coverage ratio. Example, if your monthly rental income is $2,300 and your monthly mortgage payment with taxes and insurance is $1,950, you take $2,300 divided by $1,950, that equals 1.18. So in this case, your DSCR is 1.18. Typically, lenders want to see a DSCR of at least 1, but there are exceptions and I'll cover that as well. What's the advantage of getting a DSCR loan program? You know, when it comes to getting a mortgage approval, simplicity is everything. In today's market, for a real estate investor, there's nothing more simple than a DSCR loan. So with a DSCR loan program, you do not have to provide tax returns, W-2s, pay stubs, verification of employment. So not having to provide that type of documentation is a major way to eliminate any unnecessary conditions and can save substantial time. So keep in mind, the income portion of the mortgage approval is based on the property cash flow, but the assets, the credit, and everything else for the borrower will still need to be evaluated like a traditional mortgage. So how does the DSCR loan program work? Just like any mortgage, you'll submit your application, but with the DSCR loan, you'll exclude any employment and income history on the application. So the lender will pull your credit, review your assets, and when it's time to order the appraisal, you'll get a 1007 rent schedule. The lender will order it for you. Basically, that's added to the order. The 1007 rent schedule is a form the appraiser fills out to evaluate and report fair market rent. The fair market rent that is calculated is the figure that's used to calculate your debt service coverage ratio. If the existing lease exceeds the market rents, the lease may be used to calculate the DSCR as long as the lease will continue for 6 months after the new mortgage note date and the most recent 2 months rent payments were received on time. There's a couple different types of DSCR loans. Let's start with the first one. DSCR Loan Program Standard. The standard product would apply if you're purchasing an investment property or refinancing a rental that can show the fair market rent or current rent can cover the mortgage payment, including taxes and insurance, like having a DSCR of 1 or above. For a purchase, you're looking at minimum down payment is 20%. For a refinance, maximum loan to value ratio is 80%. On a cash out refinance, maximum loan to value ratio is 75%, and you must have owned the property for at least 12 months. You can go as low as 600 on a credit score. You can't have any bankruptcies or foreclosures in the last 4 years. Minimum loan amount on these is $100,000. Let's look at another product, which is the DSCR loan no ratio. So if your property can't show the market rent covers the mortgage with taxes and insurance, a no ratio program is likely your best solution, where you can have 0 to 0.99 a debt service coverage ratio. For this product, on a purchase, you're looking at a minimum of 25% down. On a refinance, maximum loan to value is going to be 75%. For a cash out refinance on a no ratio product, you're looking at max of 70% loan to value, and credit score as low as 620 on this. So you can't have any bankruptcies or foreclosures in the last 4 years on this product. And again, for this, minimum loan amount is $150,000. So what can you expect when getting a DSCR loan? So with this alternative loan type, you can still expect the loan to be fully underwritten with the exception of personal income. That means your assets and credit will be fully verified and the property needs to meet lender requirements. The best thing that you can do to set yourself up for success for this type of loan, and every loan for that matter, is to provide exactly what the lender is asking for. Don't send in partial bank statements. Don't send an ID that's not legible. Get everything in as clearly and as organized as you possibly can. I promise you, everybody that is organized when they send their stuff in, they always close quicker. 100% of the time. So in summary, the advantage of not having to provide tax returns or any personal income documents is a major benefit for investors who are looking to start or grow their real estate portfolio. This is a great option if the property pays for itself. Also, as mentioned, even if it doesn't pay for itself, the no ratio product is a great one to look into as well. The DSCR loan is available for real estate investors on a purchase, a cash out refinance, a rate and term refinance. These are available on single family homes, condos, townhomes, and 2 to 4 units. And again, you can go as low as 600 credit score depending on the loan to value ratio and which product you're going with. So first time investors are considered on a case by case basis. Whatever questions you have, anything I didn't cover that you would want more clarity on, let me know what questions you have in the comments. And as always, I really appreciate you stopping by. Don't forget to subscribe, and we'll see you next time.